Gautam Chowchuria joins us live now. Gautam, good morning. Good to have you back. Gautam, your current house view at UBS is that at these levels, Indian markets are looking fairly priced and the risk-reward ratio is not in favor of going long. Is that the message you would be communicating at today's UBS conference, that sell India?
Not really sell India, but yeah, be defensive on from an Indian portfolio context. So we have a broad-based set of investors attending the conference. But yeah, it's more about what the investors take away also from meeting the companies and the macro experts from UBS. But our message still remains same, that stay defensive India, because the growth outlook still remains cloudy. Risk reward in terms of valuations and earnings is still not favorable, and so therefore have a defensive portfolio.
So what is your sense, Gautam? Does it seem like we may see a sovereign downgrade if in case the fiscal deficit target is revised downwards?
So that's what the credit rating agencies have been indicating, that they would be looking at concrete indicators in terms of the fiscal improvement and the ingredients for that, for them not to go down the path of credit downgrade, because they've already cut the outlook part. For them to not follow up on that in terms of a real downgrade, I think the critical parameter would be the fiscal part, and for which the subsidies remain the key element. So yes, in the scenario of fiscal not being corrected in terms of diesel price hikes or some other parameters, then yes, that risk remains real and high.
Gautam, I'm sure some of your global clients have high curiosity levels when it comes to the current Colgate scam. So how exactly are you addressing their queries for those who are curious to know more about the Colgate scam?
So the way we are telling investors is, at this point of time, this remains a big overhang for the entire coal sector, for the power sector, and even for banking space, and thus for the overall markets. When there's politics involved and when there's regulation involved, and potentially even courts may be involved, just like what we saw in the 2G scam, where it first started off with a political opposition, then you saw the case going to courts, and then Supreme Court having its own views on the entire issue. Then if that thing plays out here, then it becomes a clearly uncharted territory, and therefore the way we are telling our investors that this is basically uncertainty. It's difficult to take a clear view whether coal mines will be deallocated or we will not see the development of these mines, but what it definitely means is an uncertainty, and in this current environment of weak economic growth, that's not really a welcome thing.
Right. Gautam, what are the sound bites you are picking up from some of your key clients? Because if I map the liquidity picture, Indian markets have got record inflows this year. Now we can loosely classify that liquidity as ETF money. But are you getting a sense that now some clarity has emerged on GAR? India dedicated funds, they want to invest more in India. Global dedicated funds want to buy India.
Not exactly. So this year, in fact, if you look at the inflows, the nature of the inflows is very different from what we have seen historically in India. We still, and this is more anecdotal because the data points are not so transparent, but talking to investors and getting a sense from their meetings, etc., our sense is that this year we haven't seen the dedicated India money or even Asia portfolio managers putting in a lot of money into India. It's been more the global macro guys who are not traditional investors in India and not necessarily focused on bottom-up stock picking. They have put in a lot of more money into India. Even if you look at GEM funds per se themselves have not seen any big flows. And within that, India's weight in MSCI EM has actually come down over the last 6 months to 12 months. So in that context, I don't think even that has been a big source of money. Again, ETF is one of the common areas touted for a lot of inflows. But whatever analysis we have done looking at so many ETFs around, and that data is easily available, it doesn't look like ETFs have also been a big source of inflows into India this year. So given the $12 billion inflows, I think the big part of the inflows has been primarily the macro funds, who have taken a more global macro view on crude prices bottoming out or coming down, or Indian currency bottoming out, some of that kind of view rather than purely bottom up long-term fundamental view.